Hello and welcome. In this video, we will learn about Harami pattern. Okay, there are two types of Harami patterns: a bull Harami and a bear Harami, and we will learn both in this video. All right. So let me start with bear Harami. First, I will explain the features of bear Harami and then tell you where to use it. Okay. Now this pattern, bear Harami, must occur after an uptrend. So first there must be an uptrend, and at the end of the uptrend, this pattern must happen. Okay. In this pattern, the first candle must be a big green candle. A big green candle like this. Okay. Then the second candle must be a small body candle, and it can be of any color. So this can be of red or green. It doesn't matter. Okay. What matters is that this body must be small. Next, the second candle body must come within the body of the first candle, meaning this entire body must be inside the body of the first candle like this. Okay. So here this candle body is coming inside this candle body. All right. The wicks do not matter. Do not worry about the wicks. So these are the features. Okay. So a big red candle which indicates that the bulls or the buyers are in control. Then a small body candle, either red or green. The body must be inside that of the green candle. Okay. Now the question comes, how small must be the body of the red candle or the second candle, I can say, not red candle, second candle. The body of the second candle must be less than 25% of the first candle. Okay. So this is the first candle, and let us say this is 100%. Then the second candle body must be less than 25%. Okay. So if this is 100%, this must be less than 25%. So this is this. So it must be this small. Okay. This is small. It must be less than 25% of the green candle or the big candle. Okay. Now we use bear haramis to exit a trade. We do not use all these wicks as supports or resistances, and we do not take trades, or we do not enter a trade when we encounter a bear harami. Okay. If we had entered a trade somewhere below, then when we encounter this pattern, we have to exit the trade, meaning we have to sell the shares. Okay. I'll explain more about this pattern later, but let us look at the variations of bear harami. So this is an acceptable bear harami. We have a big green candle, first candle. We have second candle, a red candle, a small bodied candle. The body is coming inside that of the first candle, and this body is less than 25% of this body. So this is valid. Next, this is also valid. Okay, we have a very small body candle here. This is a doji, and every other characteristics are met here. Okay. So this is also a valid harami pattern. Next, this is also valid. So we have a green body candle, big one, and then we have a small green color candle. I told you that this second candle can be of any color, either red or green. The first one has to be green only. Okay. So this is also fine. All right. Now this is called as a harami cross. Okay. Harami cross, when the Harami happens with a doji as the second candle, it is called as Harami cross. One more name, different pattern. Okay, so I don't think we have to learn that, but this comes under Harami itself. All right, so all these are Harami. Okay, now let us look at the non-Haramis. So this is not a bear Harami. This is a red candle, correct? We do not want the first candle to be a red candle. Where does a bear Harami occur? At the top of an uptrend. At the top of an uptrend, we want a green color candle, a big green color candle. But here what has happened? A red candle has come. It is big, but we do not want it. Okay. Every other rule is being satisfied here, but the first candle is red, and so this is not considered as bear Harami. Next, we have a green candle, we have a red candle. Red candle is coming inside the body of green candle, and it is less than 25% of this, but still this is not considered as bear Harami because we want the first candle to be a long green candle or a big green candle. We want the candle to be controlled by the buyers. But here if you see, the price has went down, meaning sellers are there here or were there here. Okay. So even though this is a green candle, this is not a big green candle, and so this is not considered as a bear Harami. Okay. Now, by looking at the pattern, you must come to know whether this is less than 25% of this. You should not have to go and measure this and then measure this and check if this is less than 25% of that. No, that should not happen. When you look at a pattern, it must be evident that the second candle size is less than 25% of the first candle size. Okay, only then you can consider it as a bear Harami. Next, we have a green candle, we have a red candle. The red candle is coming inside the green candle and all the conditions are being satisfied. Even then, this is not considered as a bear Harami because the size of the second candle is big. We want the second candle to be small, less than 25% of this, correct? But we do not have it here, and so this is not considered as bear Harami according to the rules. Now, there are many videos out there which says this, which considers this as bear Harami, but according to the rules, candlestick rules, this is not considered as bear Harami. Okay. Now it doesn't matter what happens after this pattern comes. We go by the rules and we do not consider this as bear Harami. Okay. Now, it is better if the wicks, also come inside the candle, okay, like this, inside the candle like this, but it is okay if they go out too. Okay. We prefer it to be like this, but it is okay if the wicks go out too. Okay, so this is bear Harami. Now let me show you two charts and tell you more about bear Harami. Okay, so this is a 5-minute chart. So you can see there was an uptrend till here, and after this we have a bear Harami. First candle is a green candle, very big candle, which is what we want, and second candle is a small bodied red candle, less than 25% of this. Okay, the body is coming inside that of green candle, and so this satisfies all the rules of a bear Harami. Okay, now what does bear Harami mean? Bear Harami tells us that the prior trend has weakened, and that's all. Okay, so this pattern tells us that the prior trend has weakened, meaning it may not go up from here. Okay, so this pattern is telling us that the price may not go up from here. it may go sideways or it may reverse also. But as I said, we do not take new entries here because this is not a reversal pattern. This is a pattern which just says that the prior trend is weakening. Okay. So if you see here, buyers were active here, here and here. So buyers were very active here. We want that in the pattern. What happened was the strength of buyers weakened here, and so buyers were not able to take the price up in the next 5 minutes. And what happened was the entire price range was between the previous candles range. Okay, so the strength of buyers has weakened here. That is what we can infer from this pattern. Okay, so what has happened next? Next we know about this pattern, correct? So next a reversal happened, but as I said, we do not take a new entry here. We exit the trade if we had entered here or here. Okay, if we had bought shares here or here, we will be selling it when we encounter this pattern. Alright, now here too you can see that a bear harami has appeared, but what has happened? The price has moved still up, correct? Still up. So if you had taken a trade based on this, then your stop loss would have been hit. And as I said, this just tells us that prior trend is weakening. This tells us that prior trend is weakening. It doesn't confirm, or it doesn't say that it will reverse or it will go up. Alright, because using candlesticks we can just predict what may happen next. We cannot with 100% surety say that this will happen. Okay, yes. Next we have on our chart, we have an uptrend, we have a green big candle, and we have a small green candle, small body. So this is coming inside the big green candle and all the conditions are being satisfied. So we can consider this as a bear harami. What this is saying is the prior uptrend which was there from here till here has weakened and it may not continue further. Okay, uptrend may not continue further. That is what it is saying. So it can continue further, or it can go sideways, or it can come down also. But this is saying that prior trend has weakened. So to be on a safer side, if we had bought shares here or here, we can exit when we encounter this pattern. Or if we had bought 100 shares here, we can sell 50 here. Okay, so let us see what has happened. So price has moved a little bit down, then up, then down. So basically it was in a range. Okay, so this is how this can help us. Okay, this pattern can help us. Next we have bull harami. The features of bull harami are exactly opposite of a bear harami. Okay, I won't explain this in detail because I have already explained bear harami. We want this pattern after a downtrend. First candle must be a red candle. Second candle must be a small body candle of any color. The second candle must be inside first candle. Okay, and the size must be less than 25% of this. And this is once again used to exit a trade. Alright, so this is a valid harami. This is also a valid harami. This is also a valid harami. This is not valid because we want the first candle to be red here. Okay, in the bear harami we wanted the first candle to be we wanted the first candle to be green, but in bull harami we want the first candle to be red. Okay, so here we wanted the red candle to be a big red candle, and here we wanted the green candle to be a small bodied candle, and so these are not considered as bull haramis. Okay. Now let me show you two charts. So we have a downtrend, nice downtrend, and at this point we have a bull harami forming. Okay, we have a bull harami forming. So a red candle and a green candle, small bodied candle. Now you may say that this is not big, and I agree with you. But when we consider the size of this with this, you can see that this is way too smaller when compared with this. And so we can consider this as a bull harami. Okay. Now what is this saying? This is saying that the prior downtrend is coming to a halt. Okay, is coming to a halt, and the price may go sideways or reverse. Okay. Now what has happened? The price has gone little bit up, it has come down, and it has gone sideways here. So if you had exited here, then your money would have come back in your account and you would have it for trading. Okay. If you had not exited, then you would be stuck in the trade till these days because the market has gone sideways. Okay. Next, a nice downtrend, and then we have a harami here. This is saying that prior downtrend is coming to a halt. You can exit the trade. Okay. So if we had exited, then it would have saved our money and also our time, because what has happened after that, the price has reversed. Okay, I told you that this is not a reversal pattern, but here it has reversed. Okay, just because it has reversed here, we do not consider this as reversal pattern and take an entry. Okay, so price has gone here, and we have learnt about this pattern, correct? We have learnt about this pattern, and it has come at a prior resistance level, and the price has gone down. Okay, so this is how we use haramis to exit a trade. All right, now there is a special case where we can take an entry to a new trade using harami, and that is if we encounter a pattern like this. Okay, now see, the price is coming down and we have this pattern forming. What is this? This is a harami pattern, correct? You have a big red candle, you have a small green candle, this fits inside this. Now, what is this harami saying? It is saying that the prior downtrend is weakening, correct? Yes. Now, leave this candle, consider this candle. This is a candlestick which says that the trend will change from downtrend to uptrend. Correct? We have learnt this pattern, and it is a bullish reversal pattern. It says that the downtrend will now be converted into uptrend, right? Yes. So now you have a powerful pattern here. When you combine both candlesticks, it is a harami pattern. If you consider only this candlestick, then this is a bullish reversal pattern. So you have two things happening here. One is that harami is saying prior trend is ending. Second is this candle which is saying that the price will reverse from here. So based on this candlestick, you can enter a trade. Okay, so of course the harami is supporting this candle, but based on this candle you can enter a trade. All right, same goes for this. There is an uptrend, and at the end of the uptrend you have this pattern forming. This is a harami pattern. You have a big green candle and a small red candle. Red candle fits in the green candle and the red candle is small candle. Okay, so this is a harami pattern, and this is saying that the prior uptrend is weakening. Okay, along with that you have this candle which is a bearish reversal candle. What does it say? It says that the prior uptrend will be converted into a downtrend. So you have two things happening here. One is that Harami saying prior trend is weakening. Second is this candlestick saying that the price will reverse its direction. So based on this candlestick, you can enter a short trade. Okay. So this is the candlestick on which we enter a trade, and this Harami supports our trade. Alright. So this is how you can use Harami to enter a trade. Apart from this, Harami is used to exit from a trade. Okay.